Right, guys. All right, guys. Welcome back to my channel. Please, if today is your first time viewing our channel, please kindly hit the subscribe button because I've dedicated it upon myself to teach beginners, okay, how to trade forex. All right. So in today's class, we want to look at beginner's guide on forex trading. Okay. A lot of persons have been asking me, Delzy, I would like to learn forex, and it's not really very easy for me to be teaching people one after the other. Hence the reason why I made this video. Okay. Now we have the module one. The module one, at least this first module is going to really help us understand basically the first basic concept about forex. Now the module two will now be analysis. Okay, we will now talk about the fundamental analysis, the technical analysis, and the sentimental analysis. Now, so for the module one, the first thing you like to understand is overview of forex. Okay, now what is basically forex? Okay, forex is the word forex is actually derived from foreign exchange. Okay, so it's a short form of foreign exchange. So forex is basically the simultaneous buying and selling of the currency. Okay, okay, you actually buy, and then the person that is actually selling for you is selling a particular currency, and you're buying using another currency. For example, if you have naira and you want to actually exchange it for dollars, okay, you're simultaneously doing the same thing at two things at the same time. You're selling your dollars to the person that is buying it, right? And the person is purchasing it using naira. Okay. Now, this is just going to help us understand what basically forex is all about. Okay. Now, I also like to state here that forex market is the largest traded market in the world. Estimated about $5 to $6 trillion is being traded on forex market daily. Okay, that's to tell you how big it is. All right. Now, forex is also a liquid market. Most times you can hear people say forex is a liquid market. What does it mean for something to be a liquid market? It's basically a market that has a lot of buyers and sellers. All right, people are already on standby to buy, and people are already on standby to sell. All right, so you're very certain that if you actually take something there, you're going to sell off, and then if you go there to buy something, you're going to buy exactly what you want. So liquid market is basically a type of market that has buyers and sellers all ready to purchase at the same time. All right. So most of the time, some person can say forex is a liquid market. What does it necessarily mean for something to be a liquid market? I just explained that to us now. Now, market that has a lot of buyers and sellers, okay, that operates at a very low transactional cost. Okay. Now, we talk about market participants, all right? We've been hearing of foreign exchange. Now, who are basically those involved in those that participate in forex markets, all right? Now, those that participate in forex market can equally be seen to be, sorry, you can say, come down here. Market participants, we have a lot of them. I can say we have people that we call the retail traders. That's me and you. We have the central banks. We have the hedge funds. We have the commercial banks. Now, these are the people, these are a list of people that can actually take part in forex market. Now, the retail trader is actually me and you, okay, that is basically in the forex market to make profits. Individuals who are trading the forex market to make profits. Now, the central banks, okay, the central banks also take part in forex markets. The hedge funds, they also take part in forex markets. Hedge funds more like institutional traders, people that trade with people's money, right? You actually gather a lot of person's money and then trade into the forex market to make profit for them. All right. So we have commercial banks. Okay. In Nigeria, we have lots of commercial banks and they all take part in forex trading. Now, it's very important for us to understand that as much as retail traders are in for making profits, right? Central banks, they have two major rules for participating in forex market. The first one is to actually stabilize their country's economy, right? And the second one is to make profits. Okay. So somebody asks, what is majorly the function of central bank in forex markets? They are there to stabilize their country's economy, all right, by making sure their currency is not, on the downside, all right. So they always want to make their currency to be up. All right, so central bank, they have two major rules. First is to actually make profits, And second is to stabilize their country's economy by maintaining or by stabilizing their currency. Now we have the hedge funds, we have the commercial banks, all these other persons that are there to make profit in Forex markets. Okay, so that is that for that guy. So let's look at the next one. Okay. Now we have market Forex trading session. Right now, it's important for us to know that we have 4 trading sessions in Forex markets. We have 4 trading sessions in Forex markets. 4 trading sessions. We want to ask which are the trading sessions. We have the first one. We have the London. We have the New York. We have the Asian or the Tokyo. We have the Sydney session. Now, it's very important for us to know that each of this session, right? Now, they trade at a particular time in your local time. Now, from Monday to Friday, Forex market is being run for 24 hours. It opens on Sunday night, 10 p.m. Sunday night, and closes 10 p.m. Friday night. All right, that's for Nigerian time, GMT +1. Okay, now, so for those of us that actually stay in other part of the world, just for you to look up your time frame, your time, and then not the time frame, your time zone, and then check out the timing. All right, so we have basically 4 sessions. We have the London session, we have the New York, we have the Asian, we have the Tokyo. Now, the London and the New York session is the most traded session, right? Is the most traded session. We're going to talk about this later. Okay, let me just talk about it now. Now, London opens from 8 a.m. in the morning and runs through 5 p.m. All right. Now, New York opens by 1 p.m. and runs through 11 p.m. Now, you realize that between the hours of 1 p.m. to 5 p.m., all right, this is Nigerian time, GMT +1, right? Now, between this 1 p.m. to 5 p.m., these 2 sessions will overlap. Like New York will actually meet up with London, making the markets more active, right? So the best time to trade, if you really want your candlestick to open and close so fast, candlestick will mean, of course, you've seen your chart, right? Each of those candlesticks are being formed. So the faster the candlestick, the more buyers and sellers that is in the market. Okay, now, market hours, right? We said it opens by 8 a.m. on Sunday, right? And 10 p.m. on Sunday, GMT +1, and closes 10 p.m. on Friday, GMT +1. All right, so if you want to trade, okay, the best time to trade is always in the afternoon, anytime at all, actually, but the time you're going to have a lot of buyers and sellers, right, is actually between the hours of 1 to 5 p.m., where these 2 biggest sessions, London and New York, will actually coincide. Okay. Now, moving further, we have basic tools. All right, just like every other job, if you actually want to go to the farm, you get your shovel, you get your machete, you get your hoe, and the rest of them. So for Forex, we need some tools. All right, basic new tools. Now, the first thing you need a phone or a laptop or both. So if you have a phone, right, you can actually trade Forex markets. If you have a laptop, you can actually trade Forex markets. How about if you have both of them? Wow, you're good to go. Okay. Now that's the first thing you need. The second one you need, you will need mobile data or data. All right, because you can't actually access the Forex market if you don't really have data. Okay, so this is more like what you're going to be the sacrifice you're going to be making, the price you're going to be paying to make sure that you're actually online. So you have to get your data. Now the next thing we need an app. We have Meta Trader 4 or 5. We have Meta Trader 4 or 5. Now you can actually get this from App Store or Play Store. All right, you can always get this in App Store or Play Store. Okay. Now we also have trading view. Now this is actually a platform where you're going to be accessing to see the chart of see what is actually happening in the forex market per day. All right. If you're actually using phone, you can actually get the app. Right. You can get the app by actually going to your Play Store, your App Store. If you're using laptop, you don't have to really get the app. Just use the web version www.tradingview.com. All right. So these are basically what you need, and of course, you will need a journal. All right, something to be recording your trades, right? When you actually entered and when you exited the trade, right? What made me to enter? What made me not to actually, stay longer in the market, right? The journal is going to come up again when we start talking about analysis, okay? Now, the next thing we're going to be talking about is currency pair, all right? Now, currency pair. It's actually very, very important you know that, okay? Just like I told us, Forex market is a simultaneous buying and selling. Okay, so let's actually move to this guy. Let's say currency pair. Now, if you could recall from what I told us earlier, I said Forex market is a simultaneous buying and selling, right, of assets. In this case now, I gave us an example. You have dollars, right? And let's say you're a Nigerian, you want to get Naira equivalent of the dollar, right? You actually meet either your bank or the bureau de change, whoever is in charge of exchanging for currencies, right? You're definitely going to hand over your dollars to the person. Person is going to hand over Naira to you. In this case now, you've exchanged currencies. And if you notice that it's actually two currencies that was exchanged, the Naira and the dollar. So two things actually can be said to be a pair, all right? So you might want to actually wonder what is currency pair? A currency pair, let's write it down. Currency pair is a pair that consists of two different currencies. It's a pair that consists of two different currencies that are traded against each other, right? We said is a pair that consists of two different currencies that are traded against each other. Now, for example, we have USD, and then we have let's say JPY. You may want to ask yourself, what is actually this JPY? What is this USD? Now, most of the currency pairs are usually denoted by acronyms, all right? The first two letters stand for the currency, and the last letter stand for the country's. The first two letters stands for the country, while the last digit or the last letter stands for the currency. Like in this case now, this is USD. This one is USD, United States dollars. All right. Now this one now is Japanese yen. Now we have an exception for CHF. CHF is Swiss francs, which is actually Kung Fu. I don't really know how to pronounce that stuff, but this is only exception to the letters and the acronyms here. Now we also have let's say for example we have a lot of other currency pairs. We have GBP, USD. We have Euro USD. We have XAU. Now gold. This is XAU is actually gold, right? Gold is actually not a currency. Gold is actually a commodity. Okay, so you don't in forex market we don't trade only currencies. You can also trade metals, right? Metals and actually indices. We can trade a lot of things forex market. So it mustn't have to be only currency pairs alone. All right. So I'm just trying to form a pair. So we actually do this in pair. We have a whole lot of them. So let me write them out. We have USD, CHF. We have GBP, JPY, and so on. We have NZD, USD. Now the first one, now this is actually a currency pair. All right. Now this is the first three digits is actually for a different country, Great Britain pounds. Now this GB stands for Great Britain pounds, which is actually currencies for the United Kingdom. All right. Now we have the USD, which is actually United States dollars, okay, which is the currency for America. Now euro is actually Eurozone. Now euro is most likely not following the same pattern as the other ones because euros is actually being used by a group of European countries. Okay, so euros stand for euros. Okay, the first two digits is actually not countries letter or acronym. Now we have the second one, USD. Now the third one is gold USD. All right, gold, like it's just like we have gold. Gold is actually not the name of a country, so gold is gold. Now we have this one, United States dollars. Now Swiss francs, this for Switzerland. Now Great Britain pounds, Japanese yen, New Zealand dollars, right? USD dollars. We also have AUD and USD. Now this is actually Australian dollars. Now, it's very important for us to know that the two currencies that is actually forming currency pair, right, is actually further divided into base currency and quotes currency. Okay. Now, the first currency in the pair is a base, and the second one is a quote. For example, if I have GBP USD. This is actually the base currency and is actually the quote. Now, what this simply means is that, right? Now, if, okay, I'm going to explain this much later. All right, so let's understand what a base and a quote currency is. Okay, now, if I have USD JPY, once again, this is a base currency and this is a quote currency. Okay. Now let's take this off. Now let's look at this. Action on currency pairs. Now, if you actually sell a currency pair, we're getting to that when you get to your MT5, your MetaTrader 4, maybe you want to place a trade, right? When you actually tap on sell, which action are you actually executing? If you tap on buy, which action are you actually executing? Now, for example, let's assume GBP USD, right? Now, assume this guy has a value of 1.1400. Now, each currency pair will always have a price, okay? Now, this price is basically, right? It means that for every 1 GBP base, you have 1.1400 USD as quotes. So it means for me to have 1 GBP, I need to bring this. That's what it means, right? So take note of that. Okay, for every one base of this will always give us the quote of what is written here. So if I say, for example, gold is gold USD, let's say is 1980. Okay, it means that one gold is 1980 USD. That's what it means. All right. For every one base, this price becomes that of the quote. Okay. Now, since we've actually understand this, now let's look at the action of currency pair. Class, the selling and buying action. If you sell the currency pair, you're actually selling the base and simultaneously buying the quote. It's actually a simultaneous action, right? If you sell, whatever action you actually click is going to be activated for the base currency, right? And the opposite to be activated for the quote currency. So if you sell, let's say, if you sell GBP USD, this means that you're selling GBP I'm buying USD. That's what it means. Now, if you buy this pair, GBP USD, it means that you're buying GBP and selling USD. You don't have to bother about the second action, right? The second action is actually a simultaneous process, right? It's a counter process. The moment you actually do this, your broker automatically is going to do the other one for you. So that is why we said it is actually a simultaneous process. So whichever action you're taking in your MT4 or MT5, okay, if you click on sell in your MT4, automatically what you're doing there is that you're selling the base currency, right? And of course, you're buying the quote currency. All right, so that is that for currency pair. We have several types of currency pairs, all right? We have the major pairs, we have the minor pairs, we have the exotic pairs. Now, the major pairs are majorly the ones that contains the USD. It's very important for you to know that we call the major pairs not because they are major. The reason why they call it major pairs is because they contain the USD. The United States dollar is seen as the most used currency in trading, all right? So anytime the currency of US is actually involved in a pair, we call that again major pair. There are also other pairs like minor pairs, right? They don't contain USD, but they are still a very powerful pair, right? For example, GBP US, JPY. This is actually a minor pair, and this minor pair is also being traded as much as they trade GBP USD, all right? Okay, now let's look at our next. So we actually cleared this. We've cleared this. Now let's look at lot size. You might want to look at lot size. Okay. Now I would like to take us to. I'd like to take us to. What is lot size? Now what is lot size? Lot size is actually a standard unit of measurement. Okay. Now in a layman understanding, as a trader, you need to really understand what lot size is. Now this is what I mean. Now you hear some person say, I placed a trade using 0.01 lots. I placed a trade using 0.1 lots. What does it necessarily mean? Let me explain, guys. All right. Now, if you actually go to the market, maybe let's assume you're a trader. Okay, you're a trader, you actually buy and then resell. You're a retail trader, you go to the market, buy goods, come back and sell, and then make a profit. All right. Now, if you go actually to the market to buy, you realize that the size you're going to buy, right, depends on your account balance. If you have 50,000 naira, all right, the bulk quantity you're going to buy might not be as much as somebody that is having 1 million naira. Okay. Now you realize that the person that had 1 million naira use it to purchase some goods. When he returns back and makes sales, the profit is going to make, of course, be larger than you that actually purchased for 50,000 naira, right? Because the 1 million person is going to buy in large quantity, whereas you yourself 50,000 naira you're going to buy in a low quantity. All right. Now, so we said a lot size in Forex is basically a standard unit of measurement. Right now, we have majorly three types of lot size. We have the standard lot, we have the mini lot, we have the micro. Now, in your MT4, your MT5, your trading platform, you're not going to be seeing any of these letters or words here. You're not going to see standard, neither will you see minor, mini, or micro. Right now, what they normally do is that they might be the trading platform replaced these words with this size. So when you go to your MT4, which of course I'm going to show some after we're done with this class, with this session. When you get to your MT4, MT5, you're going to see in the section of placing your trade, you're going to see 1.0. I'm going to show it briefly. You're going to see 1.0. You're going to see 0.1. You're going to see 0.01. Now, if you actually type 1.0, right? Now, the broker or the system understand that you're referring to one standard lot, right? 1.0 means one standard lot. If you press 2, it means 2 standard lots. If you type 3, it means 3 standard lots. Right? Whatever you type, they multiply it by the standard. Okay. Now, mini lots, if you actually type 0.1, the system is going to understand that you're referring to mini lots. If you type 0.01, the system is going to understand that you mean micro lots. And each of these sizes depends on your account balance, right? Just like an example I gave to us, somebody that has 1 million naira, the quantity, the size of market is going to buy is actually not going to be as much same thing as the person that had 50,000 naira. The 1 million guy is going to buy large quantities of goods, right? But you that had 50,000 naira, most likely going to get the quantity. All right. Now, it means that your account balance matters a lot. Okay. Now, one lot size simply means you're buying 100,000 units of whatever you're buying, right? If you're actually buying a currency pair, let's say GBP USD, right? Let's get back to our, so let's say you're buying sorry. Okay, so let's say we are buying let's say we want to buy GPY, GPP, JPY, right? Now you come to your, let's say the price of this guy was 170.78. You go to your MT4. If you actually put 1.0, the system is going to understand that you're referring to one standard lot, right? And the unit or the amount of GBP USD you can buy is 100,000 units. If you go to your MT4 and type 0.1, the system understands that you're actually seeking for 0.1 standard lots, which is sent as mini lots, right? Now, this is going to give us 10,000. Now, because if you say 0.1 times 100,000, it's going to give us 10,000. 0.1 is 1 all over 10, right? Times 100,000. Now, this cancels this, giving us with 10,000. All right, so if you actually choose 0.01, now this is mini lots, and this is standard, and this is micro. Okay, now, so if you actually go with this, the system understands that, okay, I'm actually going with 0.01 standard lots, which is micro lots. So the amount of this unit I can actually purchase is 1,000 units, right? Now, it actually sends a signal, or it sends an information to the broker. Oh, this person wants to buy 100,000. This person wants to buy. So anytime you see somebody increases his standard lot, maybe some person can use 5. 5 standard lots simply means 5 standard lots, and 1 standard lot is 100,000. So if you choose 5 standard lots, you're choosing 5 times. This is the unit you're going to buy, 500,000. So if you actually do, now okay, let me explain that here. So if you choose 5.0 standard lots on GBP USD, and the cost of this is 1.40. Sorry, the first one I used JPY, I've switched to GBP USD. Now, if you use 5.0, so this is actually what you're buying. You're buying 5 times 100,000, which is 500,000. All right, this is amounts you're buying. Now, it simply means that you need a certain amount of money to be in your account to be able to purchase that. So you're buying 500,000 units of GBP and selling at the same time 500,000 units of USD, right? You're the one doing this one, and your broker is the one doing this one. Your broker is the one doing the opposite, and you're the one doing the direct, okay? So if you're buying this pair using 5 standard lots, this is actually what the system is going to understand this as, because 5.0 is 5 times 1.0, right? So that is basically what this means. So we are done with lot size. Now let's talk about pips. Let's talk about pips. Now, let me take us back to pips is basically a short form, an acronym for points in percentage, or percentage in points, right? It is the smallest price movement in an exchange rate of a currency pair. Okay, now let's go back to our board so I can explain something for us to understand. Talk about pips. We say pips is actually percentage in points or vice versa. Now, what this simply means is very simple. It simply means that pips basically is the smallest movement an exchange rate can make. Now, let's assume the price of GBP USD is 1.14005. And then this price, maybe around 10 a.m., you actually met the price here. And let's say by 11 a.m., 1 hour later, this price moved to 14035. Let's assume something like this, 035. All right. Now, this market has actually moved 3 pips because we said for most currency pairs, in fact, for all the currency pairs, for most currency pairs, the pip is always calculated to the 4th digit after the decimal. The 4th digit after the decimal is considered as a pip. So this is the 1st digit, this is the 2nd, this is the 3rd, and this is the 4th digit. All right, this is 1, 2, 3, and 4th digit. All right, so what this simply means is that if I want to calculate for the pips of this guy, I would say 3 minus 0, which is 3. Or I can simply say, I can subtract 400. If you noticed, this is 1400 minus 1403 minus this. It's going to give me 3. Now, this last digit here is actually not being counted. This is called the pipette. The pipette is more like as the pipette is actually insignificant because it's more like the long hand of a clock, the one that is always moving, the one that is always oscillating, all right? The one that counts in seconds is actually the pipette. It's not necessary, all right? But the hours and the minutes is actually important, all right? So the pips is calculated to the 4th digit after the decimal, right? Now, whereas in pairs that contains JPY, any pairs that contains JPY, the currency pair is always having 2 digits after the decimal. For example, any pair that have, let's say, GBP, JPY, you're going to see most likely, let's say, 170.78, right? It's always going to end with 2 digits after the decimal point, all right? So in this case now, the 2nd digit here becomes the pips, all right? Now, but for most currency pairs that have 4 digits after the decimal, the pip is always calculated to the 4th digit after the decimal place, right? So if a price, let's say this guy moved from this to, let's say, 170.85, it's very simple. If you subtract 85 from 78, okay, you're actually going to have 7. So it means that this market had moved 7 pips up to this point. All right. Now remember, when we're talking about lot size, I actually skipped to mention something. I was supposed to mention something to us. Right? Now, in lot size, right? If you choose one standard lot, if a market should make 1 pip movement, this is the amount of money you're going to make. Now, since we've understood that pips is actually the movement of the markets, right? If you had chosen one standard lot and the market actually made 1 pip, you're going to make $10. So let's assume, for example, you choose 5 standard lots, 5. Remember, 1 standard lot for every 1 pip movement, you're going to be making $10, right? So if you choose 5 standard lots in a trade, 5 times 10 is 50. So for every 1 pip movement, you're going to be making $50. But bear in mind that it's actually a two-way thing, right? The same way you're going to be making profits if the market is in your favor. If it goes against you, you're going to be losing the same amount of money. So please don't always be in the haste of using a large lot size, all right? As a starter, you should stick to 0.01, right? Because this now you cannot really lose your account easily. So if you had used mini lot size, for every 1 pip, you're going to make $1. If you had used micro, for every 1 pip, you're going to make 0.01, 0.1 And some persons will be like, this one is, I will not make a huge amount of money from this. But the truth remains that, right, as a starter, you should stick to 1 pip, all right? So if you choose 1 standard lot, for every 1 pips, you're going to make $10. So imagine if market should move 10 pips in your favor, 10 times 10 is $100. And also don't forget that if the markets move against you, you're also going to be losing 10 times 10, which is $100. All right. So that is that for pips. Now let's look at the next guy here. We have spread, right? We have spread. Now let's look at spread. Now spread basically, if you look at this, we say spread is basically the difference in price, right, between the bid and the ask price. Now let me explain this so that we understand this very well. For my spread, now we say spread is actually difference in bid and ask price. So if, for example, you actually go to exchange currency pair, or you want to go and actually exchange your currency with a bureau de change person, and the person is going to ask you, do you want to buy or do you want to sell? Right? Now, the price is going to give you, if you're buying from him, it's going to be a different price if you're the one actually be selling to you. Sorry, if he's buying from you. I repeat. If you approach somebody that exchange currency, right, the first question is going to ask is, do you want to buy or do you want to sell? Right? Now, the bureau de change person can either buy or sell, depending, right? If he's actually collecting from you, right, he's buying from you, right? If he's actually giving you, he's selling. Now, if you actually approach him, for example, let's say official price of dollar, official price of USD to Naira is 1,600, meaning that one USD is equals to 1,600 Naira. Okay, now you actually approach him to, let's say you got someone sent you $1 from the US and you actually want to change the dollar to Naira so you can actually use it to get stuff in Nigeria here. And then you approach the malam, the person, whoever is in charge of selling or buying currency pair from you. Now, this is what he's going to ask you. Do you want to sell or you're going to buy? If you say you want to sell, right, that means he's the one buying from you, right? The price is going to give to you guys, to you. You want to buy it at a lower price, right? He wants to buy, he buys from you at, let's say, 1,550. Okay, he's going to buy from you at 1,550, and then he's going to resell that same dollars, right? And then to somebody else, sells to another at 1,600, let's say 1,620 Naira. Now, if you check the difference between these two prices, the difference between these two prices is 70 Naira. Now that becomes his profit, right? So in Forex markets, the spread is actually the broker's profits, right? That means that's actually what is going to keep the broker in the market. Okay, so that is why most of the times once you enter your trade, the very moment you enter your trade, all right, you'll be in red. Your account will be reading minus because your broker have deducted his or her spread. The moment you enter, whether you make profit or not, they've taken their spread, right? So once you enter a trade, the broker has made money, right? Now, the spread most of the broker gives is always small spread. For most traded currency pairs, the spread is always very small. You can see 0.2, 0.3. Please, the smaller the spread, the more you should actually, the more profitable that pair would be. But if the spread is actually very, very large, please avoid that pair. You can actually apply that in our daily lives, right? If someone should actually buy goods that is always moving markets, the interest rates will not, the profit margin may not be much because the demand is actually high. So you actually want to sell it out fast and go back to the market. But if you actually get a market that people don't really buy it and the cost of importing it and bringing it back is expensive, it's going to put a huge profit, and most persons will want to actually buy that. So the smaller the spread, the more profitable that pair is. All right. So in case somebody asks you what is actually spread, is actually the difference in price, the asking and the bid price. Bid price is actually the buy price, the ask price is the sell price. All right. So the next thing we're going to be looking out for is So we are done with pips, we're done with spread. Now let's look at leverage. All right. Now let's look at leverage. Now, what's leverage? Right? What is leverage? You might want to ask yourself. Now, leverage is more like a borrowed fund. Okay, it's more like a borrowed fund that a broker is going to give to you to enable you, have or place a larger trade or hold a large position in the forex market. Right? In forex market, positions are referred to as trades. Right. So let me give you an example. We have different types of leverage. We have 1:50, 1:100, 1:200, 1:500, and 1:1000, 1:2000, etc. Now, what this means is that 1:50 means that every $1 in your account is viewed as $50. Right? That means with $1 in your account, you can actually place a trade worth $50. That's what it means. Now, 1:100 means for every $1 in your account is viewed as $100, meaning that for every $1 in your account, you can place a trade of $100, right? It's interesting. Imagine having $1 in your account and you want to buy something worth of $100, right? The broker is actually going to give you the ability to use $100 to buy that, right? It's allowing you to hold a big position. Okay. Now, there's one thing you must understand. There's one thing you must understand about leverage. Okay, that leverage is actually going to help you to hold a bigger position, but then don't over leverage. All right, don't over leverage. In the United States, the recommended leverage size is 1:50. Right, but you can actually want to, in Nigeria, if people want to use $20, $30 to actually hold a trade worth $1,000. So let's assume your balance. Let's assume your balance is 500 USD, right? And you're actually on a leverage of 1:1000. Now, this is what it means. $1 will be viewed as 1000 USD. So $500 will be viewed as X, all right? Now, if you cross multiply, X becomes 500,000. So if you're actually on a leverage of 1:1000 and your account balance is 500, it means that you can place a trade as huge as $500,000, right? So that's basically what leverage is, okay? Now, however, it is important for us to know that this leverage you're seeing here, let me explain something here so that we understand better. It's important for us to know that in leveraging, right, if you're using 1:100, let me give us an example. Let's say a currency pair, GBP USD, has a price of 1400, and you want to place a trade. You want to place a buy trade. Lot size, want to use lot size of 1.0. Do not forget that 1.0 is a standard lot. And the moment you choose 1.0, you're telling the broker that you want to buy 100,000 units of this. All right. Now, the cost of buying 100,000 units of GBP USD. Now, let me show us the cost. Now, the price of this guy for one of this is 1.14. So the cost of buying this guy will now be 1.40 times 100,000. Now, if you multiply this, now the total amount of money here is 114,123 USD. And this is the total amount of money you need to place this trade, right? 1.0 lot size, meaning that you want to buy 100,000 units of this. But then majority of persons actually wouldn't be able to afford this, right? Quite a number of persons will not be able to afford this 114,000, right? So basically, that is actually where a leverage comes in, right? Now, if you use 1:100 leverage, right? Now let's assume you used 1:100 leverage. Now, in this leverage, this particular one, you are to bring 1% of whatever amount the trade is. Okay, so if you actually we said the cost of that guy, if let's say for example, you have the cost of this to be 114,000 USD, all right? Now, if you're using leverage 1:100, okay, now what this simply means is that you have to bring 1% of this total money, and your broker will bring 99% of the total money. That's what it means. Okay, and 1% of this will be 1140. If you subtract this, your broker is going to bring the rest of them. So you've seen the importance of leverage, all right? Please, if you're following with this class, you can actually drop a comment on the comment section, okay? I will actually drop more materials for you, the detailed materials on this. I can send it to your email, all right? But you have to drop a comment on the comment section requesting, please, I need the material, and I'll drop it in your email. All right, thank you. So let's look at the last one, but not the least, placing of trades. Now, for you to place trade, for you to place trade, you need MetaTrader 4, MetaTrader 5. Okay, so the next video would be explaining how to place trade using MetaTrader 4 and MetaTrader 5, and also how to open your broker's account. All right. Okay, so please, if you actually gain something from this video, please smash the subscribe button. Drop a comment in the comment section if you need the materials. We are actually explained in details all of this stuff I just explained here on the screen. You can just drop your email address on the comment section, like the video, and of course share. Thank you very much, and see you in the next video.